Greetings everyone, Joseph James here, schooltrade.com, May 11, 2010. Here's your live term recap. Boy, what another incredible day today, guys. We've now had 3 days in a row, over 100 ticks in the room. It keeps getting better and better for the month of May, guys. I told you guys, get through that first quarter of the year, and now it's all downhill until end of August, guys. This is the prime time to be earning in these markets right now. If you haven't joined us as a member yet, guys, please consider doing so. I want to remind you guys, below the video right now, we have a link to our blog. Our blog has all kinds of free stuff on it, guys, and use that search box in the blog to make sure you can always find everything you're looking for. Now, if you haven't subscribed to the blog yet, that's a good place to start as well. If you subscribe to our blog, you'll get an email whenever we put something new on there. So every new video we do, every new article we put on there, every new comment if you want to. Okay, so subscribe to the blog. That way you guys have all the important stuff, and don't forget about that search box there. Another busy day, 2, 4, 6, 8, 9 total trades, guys. You can see we took a loss in there somewhere towards the end of the morning once again. Now, yesterday was different. Yesterday we took the loss at the beginning of the day, and we had to kind of dig our way out of a hole here. Well, as you can see right here, we've got the loss at the end of the morning, so we gave back a little bit of money. We'll talk more about that in a second, but as you guys can see here, 148 ticks, 1580 on the day today, guys. That brings our total this week, 2755. We are 3/4 of the way to our goal, and we're only 1/4 of the way through our month so far. So our goal of $10,000 this month looks like it's going to be easily achievable. We'll keep our fingers crossed and keep following those rules. And of course, we'll keep you guys posted throughout the rest of the month here for the month of May. Now, what's the most important that happened today? Well, we didn't have much news today. There wasn't much news events going on. We had 10 o'clock, was it business inventories, something like that, but nothing really outside of that to worry about. So with not much news, with Congress still talking about the big drop from last week today, we opened our charts and we noticed what we thought would happen. We had a relatively slow, choppy market this morning. Now, like we said last night in the video, we thought today, because of that meeting with Congress about the big drop last week, and without very much news and the fact that we're coming off of a very volatile week last week, we expected today and tomorrow to be relatively quiet. Of course, today, that changed, right? We actually saw a very slow market this morning, but that developed into a very busy market as the day went on. And of course, we always start off with our dollar. So we start off each morning by looking at the dollar, because the dollar is going to give us a little bit more information as far as what to expect ahead of time. So here's the dollar. Now I've got my slower time frame on the left, right? Here's my slow chart on the left, and here's my ATR on the right. Okay, so average to range on the right. Now, with my slow time frame, you can see here from yesterday, we had this big run up from yesterday, right? Had that big uptrend from yesterday, but today we're back to what we usually see in the dollar, which is a sideways choppy dollar. Now, fortunately for us, a sideways choppy dollar is going to mean sideways choppy markets on everything else. But remember, our DX pattern is ideal for trading with dollar index when it's slow, choppy, and sideways. So in the old days, where a slow dollar, a choppy dollar, would mean no trades today, guys, a choppy dollar, right, for us school trade traders, that means we're on the lookout now for some good opportunity. So we knew right away, looking at the dollar, sideways, double tops, double bottoms, no real trend involved. And then we focus down on the ATR here. Look at the average to range. Now, the ATR is really what tells us the true story behind the scenes, because you can see the average to range from the last 2 days has been very low, very choppy, and clearly is at the lower, right, the lower end of the average to range over the past week. You can see it was as high up here as 0.20, right, end of last week, and now we're here at 0.03. Now, again, the actual price level, or the actual reading of the ATR here, is not the big thing to worry about. The big thing here is, are we above or are we below where we were an hour ago, right? A day ago, a week ago, a month ago, right? So compare it to where we were previously. And you can see in the dollar, right, we were dropping all morning, and we're pretty much could tell here with a sideways dollar and then ATR being very low, we knew we better use caution this morning and really wait for those best patterns. So that's exactly what we did. Right, we used caution. We waited patiently for it. Our first trade, though, didn't take too long to wait for. Was here on the gold here, 830. Now, this is a very simple pattern with a little bit of a twist involved here. Notice we have the high of day overhead. Right, your high of day means it's a high profile level. We expect at the high of day for price to bounce. So at the high of day, if I'm going to trade through that high, I want to make sure I have green pace of a tape, big buyers and momentum confirming. Now on this one, we actually had two different entries here, guys, on this first trade. But however, make sure you remember, high of day, we got to see that good speed. We had the speed, we had the buyers, we had what we needed to get in here, right? There were two entries here, a break above each one of these swing highs. Now I took the second one. Right, I took the second one here. You could have taken the first as well, but the first was a little bit premature. So here at 8:30, a breaker pattern long, and what that breaker pattern long means is it's a continuation pattern up through that high of day. We'll break through the high, buying at 20.7. We got our +4 target filled. Move that stop to entry +1. We got filled there at +1. So 2 off at 4. 2 off at 1. That's a 4 contracts trades total. That's 10 ticks or 100 USD. So we put $100 in our pocket, guys, right off the bat at 8:30. Kind of get the blood flowing here. Kind of get the cobwebs shaken off. We took one more winner on crude at 9:12. I'm gonna have to move through this relatively quickly here because we had a lot of trades today. There was a 9:12 breaker pattern long at 79.49. Made $100 there. This, of course, though, happened at the same time as that breaker long on crude at 9:12 and at 9:13. At 9:12, we took the crude breaker pattern long, but at 9:13, just before that 9:15 alarm went off for 9:30, we saw the euro. Now, if you guys were with us last night, did you guys watch that video last night? Remember last night we were talking about how, right, we wanted to get above the 27.91, right, dollar below 84.275. Remember that from last night, guys? We called this last night. So on the euro trade here, we woke up this morning and we realized we didn't have to wait for the 27.91 level. We could take it a little bit earlier. So we decided to get in a little bit earlier here. We defined a previous low of day at 27.24. We used that as overhead resistance. We broke above 27.24, eyeing at 25s. We took, of course, our +10 ticks. Now, we made the right decision here, guys, because we've seen lately these things have been setting up at the wrong times for us. This one's set up, as you can see, right at 9:15. So by 9:25, I was ready to get out of this trade, right? So we took our +10 at 9:25 this morning, just before that U.S. market open came in and pushed this thing back to the downside. If you look at your Euro chart right now, you'll see the market ended up deteriorating to the downside. So we really, for the most part, perfect timing the trade. We got in long at 25s. We took target there at 36s, 35s, 36s for +10. We take, of course, all of it off there, guys, because we were right before the U.S. Open. Now, if you weren't going into the Open at that time, you could have held that trade a little bit longer. We made about 10 more points on it. But, of course, you got to be a little bit more cautious, though, around that U.S. Open. So, of course, 40 ticks, guys, on 10-tick move at $12.50 per tick, guys. That's 500 USD. Now, to trade like this, you would need about a $2,000 account. That's a 20% return in only one trade, right? 20% return on one trade, and we call that the DX pattern here on the euro. Let's keep moving. Now, next up, guys, we had back-to-back winners here on the crude. Now, notice this price action on crude here, guys, just before the 10 o'clock hour. Of course, we had news at 10 o'clock. Look at how we break to the upside here, right? We move up to the upside very strong here. We test the high of day, and then, guys, what do I always say? Right? The faster it rises, the faster it'll fall. So we saw this thing between literally 950 and 951 rise and test the highs. And with that big jump to the upside, we're thinking short this thing, right, at these highs. So, of course, you'll notice here 77.34, right? There would be your ideal entry. 34 would be your ideal entry. You can see right below that swing low. However, though, we had a red line here we had to worry about, 77.30. So we had to wait to get below 77.30. There's your two-step pattern short, right? Breaker pattern short at 9.52. And then you can see what happened was we come down, we bounced off that, it stopped me out at my point of entry at 28, gave me 10 ticks in the first move, and then we took another break below that swing low a 1 minute later at 22s for another, right, 10-tick move. This time a little bit better though, +4. Stop to entry -1, and then we got +3 on it. So a little bit of a lucky bounce there on that second trade. But you can see we got 10 ticks out of the first move, we got 14 ticks out of the second move, and this is a great example of how, even in a very choppy environment, guys, you can still feel comfortable taking these trades because you'll notice we're protecting ourselves against reversals. By tightening up that stop, moving that stop down, yeah, it bounced us out of these trades here a little bit prematurely, but in a very choppy environment like this, guys, this is going to happen no matter what you do. Right? Very choppy price action. What we want to do is we want to make sure we have confidence in our trading, and we build that confidence by guaranteeing these winners will not turn into a loser. right? How much confidence do I build when I know that if I get into a choppy environment, as long as I can get that +4 filled, move that stop down, I'm okay. And that's exactly what we've done here. Now, yeah, maybe we could have made 20 ticks on one trade, but instead we made 24 ticks on two trades. All right, guys, but it's always better to be prepared to protect your capital first. Okay, we always wonder, maybe we should use wider stops. No, right? Wider stops takes the emphasis off protecting capital, right, and puts the emphasis on making capital. We want to, especially as a new trader, we want to keep that emphasis on protecting that hard-earned money. This was a great example, guys. Even in a very choppy, range-bound market today, we were able to grab two profitable trades there, guys, in a very choppy environment. So good work on that. Back-to-back trades there on crude.